Imagine you started working at a bank and a client comes in and deposits 50K in cash, okay? And that client doesn't have any job. And when you say, okay, where did you get this 50K? He doesn't explain. This is a red flag. Okay, you as a great mutual fund dealing rep, you need to know that you have a responsibility when you see these types of red flags. What's your main responsibility? Reporting to FINTRAC. FINTRAC is an organization that takes care of these red flags, okay? There are a watchdog that monitors every transaction and every client to make sure everything is running smoothly in financial industry. Let's know about FinTrack, everything, ins and outs, and your responsibilities and duties when you see such a red flag. Let's get it done. FinTrack. What's FinTrack? FinTrack, or Financial Transactions and Reports Analysis Center of Canada, is Canada's financial watchdog. It's an organization that monitors money movement to stop money laundering. Okay. We talked about money laundering and terrorist financing. So it's an organization that watch individuals and corporations and detects the illegal money movement. Okay. Now, let's elaborate and dive deeper to FinTrack with an example. Let's say you work at a bank. A client walks in, and after a friendly greeting, you ask, how can you help her? She says she wants to open an account or conduct a transaction. Now, you, as a registered mutual fund sales rep, you must follow anti-money laundering and terrorist financing AMLTF regulations to ensure compliance with FinTrack requirements. What do I mean by this? I mean, this process includes verifying the client's identity, conducting due diligence, and reporting any suspicious activity. Let's break down each of these steps. Step one is verifying identity. Okay. How do we verify individuals and corporation? Let's start off with individuals. First of all, if a client comes to you, we ask for a government issued ID. Okay. Check that the client's name and appearance match the ID. Ensures the ID is authentic and confirm it has not expired. Okay. If in-person verification is not possible, use video meetings or mobile authentication technology. I mean, you may be laughing, okay, this is obvious. We have to check the ID. I know it's obvious, but just close your eyes and imagine it's a day at a bank and you're doing your job, okay? This is exactly what you do, what you need to do is step by step when a client comes in. You ask for a government ID. You match the appearance. You check out the expiration date. If the client can't come in person, you set up a video meeting and then a mobile authentication technology. Okay. Now, if a client doesn't have a government issued photo ID like a driver's license or a passport, um, what do you need to do? What do you need to do? Or let's say you are suspicious about the ID, okay? They have an ID, but you are suspicious. Banks can use 4 alternative methods to confirm their identity. I bet you don't know that. I mean, you knew about the ID, but these 4, you don't know. Okay, you have to listen. Um, the first alternative method is credit file check. The bank can check the client's credit history from a trusted credit bureau like Equifax or TransUnion. Banks usually don't do it. I mean, because it'll be a hard check and it'll affect the credit score, of course. Maybe it's a soft check for some banks, but I mean, banks usually avoid it. Okay. The second alternative method when you are suspicious about the ID or when a client doesn't have the ID is dual process method. Uh, what does it mean? The bank verifies the client's identity using two separate and reliable sources. Like what? A utility bill, like a electricity or internet bill with the client's name and address on it, and a bank statement or government document, okay? A bank statement from another bank, for example, or any government document. So it used two different documents to verify the identity of the client. The third alternative method is affiliate member confirmation. What do I mean by this? A bank can rely on a trusted partner or affiliated bank that has already verified the client's identity. Let's say your client, you work at RBC and your client have a history with TD. I mean, TD has verified your client. Through affiliated member confirmation, RBC can contact TD saying, "Hey, I do have this person which had businesses with you, accounts or mortgages or any other type of business. Do you confirm this identity? I mean, is he a legit person or what do you have about him?" I mean, banks have a system in place to uh, do to verify identity through this channel. The fourth alternative method is reliance method. What do I mean by that? The bank can depend on another trusted financial institution like a mortgage lender or lawyer that has already verified the client's identity. So it's like the third channel. If you cannot verify a client or entity's identity, follow your firm's policy and refrain from proceeding with the transaction until compliance requirements are met. Okay, you suspect the ID and you went through those four channels, alternative methods, and you're still suspicious. Okay, just reject that client. Um, I'm sure the firm that you work for has a procedure in place, has a rule in place, and that rule says, okay, refrain to open an account or conduct any business with that client. You have to follow that policy. Now, sometimes we do face corporation. It's not always about individuals. How do we identify and verify identity of corporations? If the client represents an entity like corporation or trust or partnership or fund like pension fund, confirm the entity's existence by reviewing official documents such as what? Such as corporate records, articles of association, partnership agreements. Okay. Individuals have government ID, corporations have corporate records or articles of association. Okay. When dealing with corporation to verify their identity, you have to review these documents. Additionally, identify the beneficial owners of the entity to ensure transparency and prevent illicit activities. Okay, somebody comes to you, say, okay, I'm a representative of Corporation X. You review the article of association or corporate records of that corporation. And then you also need to identify who are the owners, who is the director, decision maker there. Is this person who's saying I'm from Corporation X a legit person Is his name on the owner's list? If you cannot verify a client or entity's identity, follow your firm's policies and refrain from proceeding with the transaction until compliance requirements are met. Exactly same as the individuals. Great. So in the first step, we verified identity, both for individuals and corporations. Now, the second step is conducting clients' due diligence. Even after verifying identity, further due diligence may be necessary in certain cases. What are those cases? Number one, third party determination. You need to ask your client that, are they acting on behalf of another person or entity? You also need to ask, will another person or entity provide instruction on the account? If the answer to any of these questions is yes, you need to collect and document information on the third party. The second case that you need to follow the due diligence and do the due diligence is uh, politically exposed persons or PEPs. So, who is PEP? Someone who holds or held a high government position in the last 5 years, such as who? Such as prime minister or senators or mayors and government officials. So, if Justin Trudeau comes to you to open up an account, you know he's a PEP because uh, he was a prime minister. He's not now. Uh, he was a prime minister, so he's a PEP. Okay. Then military generals and heads of state-owned banks or companies, judges of high courts or supreme courts, family and close um, associates of PEPs also count as PEPs. Okay, these are PEPs, politically exposed persons. We need to know that if our client is a PEP or not. What's HIO? So, who's HIO? Leaders of global organizations like UN, like World Bank, like IMF. These are HIO, so leaders of global organizations. Anyone who held this position in the last 5 years and their family members and associates are also HIOs. Let's wrap it up. By checking for that third parties, PEPs, and HIOs, banks help prevent fraud, corruption, and terrorist financing. They must collect extra details and monitor these client transactions. So we had a normal client, individual, normal corporation. We identify those clients. We talked about it. Then we have special clients, okay? Third party determination, the PEPs, HIOs, these are special clients. We need to take more steps and take these clients and monitor these clients more closely, okay? Because these are at more risk of money laundering or terrorist financing. You, as a mutual fund sales rep, you need to know that if a transaction seems suspicious or unusual, you need to immediately report that transaction to your firm's compliance department, and that compliance department will report that transaction or that activity to FINTRAC. Okay. But what are those red flags? What are those suspicious activities? They may include large cash deposits more than 10K. If you go to your mobile bank right now, you cannot e-transfer more than 10K. The maximum is 10K. That's the root of That's because of the FINTRAC rule, okay? That's the root here. The second red flag or suspicious activity or transaction is frequent international wire transfers with no clear business purpose. If you encounter and face these types of suspicious activities, you must document the details of the transactions, okay? What details? Like client information, the name, last name, address, everything. The nature of that transactions, the reason for the reason for suspicion. You have to mention and document everything when you face such a client. You have to document these details. What if you're lazy and don't document anything? Failure to report suspicious transactions can result in legal consequences and regulatory penalties. So please document them. Don't be lazy. Great. This was about FinTract. We had individuals, normal individuals. We identified them. And if we're suspicious about their ID, we had those 4 alternative channels and methods to verify their identity. Then we had normal corporations. Then we have special uh, clients like third party determination, PEPs, and then HIOs, and the do's and don'ts about the suspicious activities. What are the examples of suspicious activities and transactions, and what do we need to do? What do we need to document? We covered everything about FinTrack. And you are learning a lot. Thank you very, very much for your trust. Please go crush the quiz, and you will see what type of question you may get from this topic on your final test. And keep this in mind that I may explain a lot because I don't want you just be prepared for your exam. Okay, this is our main goal. I know, and we will definitely pass the exam together. Don't worry about it at all. But after all, you want to be and become a financial advisor or any role in bank. You need to when you're learning something, you need to make sense of it. I put it in a scenario based style teaching, or I put in lots of examples, lots of details to, and I want you to imagine the whole scenarios, the whole topics and concepts and the steps in your mind. That's why I'm explaining a lot. I'm sorry if I'm bothering, but I have to do it because I want you to learn everything, ins and outs about that topic. Great. Go crush the quiz. I'll see you in the next lecture.